Welcome to This Week in Money. I'm Jim Goddard. Today, Bob Hoye from chartsandmarkets.com tells us why the markets are showing signs of topping. He also talks about how crude outperformed expectations over the winter. Editor of the popular blog Juggling Dynamite, Danielle discusses how corruption gets in the way of progress, and it's a good thing. Some people just can't be bought off. Hilliard MacBeth, author of the second edition of When the Bubble Burst, Surviving the Canadian Real Estate Crash, comments on how governments really have no way of controlling real estate bubbles. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Cypress Development CEO Bill Willoughby. We'll talk to Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Well, here we are looking at the closes on Friday, and the S&P was up actually quite nicely, up 0.6%, and that's all right. The advanced declines were not so good. The base metals were up a little, and crude oil, I think it was down today. So it's a rally that started out of pretty heavy liquidation going into the end of the year. And you'll recall that that was our target in the summer. We were looking for a liquidity problem to be discovered in the fall, and at the outside, it could run actually right to Christmas time, and it did. That was based on historical work. So we had very oversold stuff. I put out a piece on December 26th that the S&P and crude oil were both extremely oversold. And then we looked and said, now, where would a typical rally of an intermediate nature run to? And we thought, well, March is a good season for recovery in base metals and a recovery in crude oil and in the stock market. So that's where we have had our target of March. And this is where we can also, for traders, ask the question, is the stock market up when it should be? Yep. And as we had the target of March, it wasn't the 1st of March, it was around March sometime. And then the next question is, are there signs of speculation? And yes, for the last couple of weeks, we've been getting technical readings that you only see near the end of a very good rally. So let's just sum it up by saying the market's overbought at about the time when it might have become overbought. So what do you do then? You take some money off the table. So we would, it'd be lightening up on this. The interesting thing, Jim, is that the technical excesses being registered now, while not as strong as they were in January a year ago, they are high technical readings at a much lower level on the stock market than reached in 2018. So that suggests that, hey, if they had been able to get the senior indexes up to new highs with similar overbought, then you could say, okay, it's been a rally in the bull market, but it's not made new highs. So one wants to say, yeah, I think I'll be a trader and take a little money off the table.
Bob, how did oil do over the last few months? Was it unexpectedly more positive than many people expected?
Well, well, it's one of those things in the marketplace. In December, going into Christmas, when it was quite soft, of course, opinions then bearish, and on our technical work, it was oversold, and of course, at that time, you never know. Hey, it might get a little more oversold in a week or so, but that turned out to be the low. And I read in an oil advisory place that it's been one of the best rallies in January into February kind of thing. Good percent rally for this time of year was very good. So, it's been a good rally. And again, it's now showing technical excesses. And it's another one, because when we were looking for the stock market to rally, we were also looking for base metals and crude oil to rally. And it's the same thing. Is it up when it should be? Yep. Are there signs of speculation? Yeah, the technicals are overbought, not extremely so, but overbought. So again, in this sector, we could look for a correction, but with crude oil, you got weird seasonal things going on for the rest of the year. So on this rally, you can't say that this is the high for the year, whereas on the rally last summer, when it was acting well, we looked at the old seasonals, and some years ago, there was a seasonal that gave you a rally out to late September, early October, and the high, of course, turned out to be 77 on October the 3rd, which is then when we were looking for a seasonal low in December, January, which came in. So, anyways, there's another one of these things where if you're a trader, you can take some money off the table with the oil stocks or trading the product itself. Same with base metals. The base metal mining stocks have had a really good run, and it's time to take some money off the table there too. But some investors may wonder what to do when you raise some cash, and because if this goes into a contraction, which could be, then the interest rates, like Treasury bill rates, are going to go down to zero. So every time you roll over, you're going to get less. So in a unfavorable stock market, you can often get a better return out of 3 to 4 year corporate bonds. Go to corporates because you get a higher income than you can out of Government of Canada or Treasury bonds. And good corporates, investment grade rated. But in a 3 to 4 year term, because if you're too far out in term, price change can get you. Whereas if you're around 4 years, you're heading towards maturity and the bid will be there. So it's a nice place to put some careful money and you'll get a decent return. And then for those of us in Canada, the likelihood is that the U.S. dollar will, in a indifferent or declining stock market, quite likely the U.S. dollar will go up relative to the Canadian, in which case if you're owning some U.S. corporates, you're going to get a little extra more out of the currency play. And that's a nice, safe place to be.
Gold took a bit of a drop at the end of the week. What's the story there?
Yeah, same thing. Underpriced at Christmas, and it rallied with base metals and with the crude oil. And actually somewhat weaker, but it wasn't a very weak dollar. So it became overbought. I think it was the 21st. Last week we noted the overbought on gold and silver, and also I think platinum too. And we're looking for the correction. And yes, it's correcting. It's selling off. And then the other one that's happening there is the silver is falling faster than falling faster than gold. And that's the old game. In a bull market for both metals, gold and silver, silver will outperform, which it has. And then when it goes down, silver outperforms on the way down as well. And it's just the way the interplay is between those two metals.
Bob, thank you so much for being on This Week in Money.
Well, there we are.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Coming up, Danielle Park next on This Week in Money.
Always consult your investment professional before making any investment decision.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Welcome back to the show, Danielle.
Thank you, Jim, and happy March.
Danielle, we haven't talked about what Venable Park Investment Counsel Incorporated does for some time. What do you do?
We're an independent portfolio management company. We're analysts and risk managers. We don't sell products. We actually work just for the client. No commissions, just on a fee-for-service basis, and we do full financial planning, top-down allocation service, and just ongoing financial advice.
Now, a big topic for this week's show is corruption and its influence of big companies on government and government actions. We're seeing the SNC-Lavalin scandal play out live on television in Canada, the dealings in the U.S. with their government, and even in Israel and other countries, there seems to be alleged corruption involving the government and big business. How common is it for big business to interfere in government services and operations?
I think this is probably the most defining issue of our time at the moment. I think it is standing in the way of progress and evolution on so many levels. And we've seen this throughout history at different times, pendulum swing from one extreme to another. And right now we're at an extreme period of corptocracy, of basically money buying influence and power. And although that's always, as I say, been a theme with humanity, it gets through these periods where it gets so extreme that it literally breaks all trust in the system and trust in the integrity or operations, and sort of in the process really squelches out the honest operators, because they can't compete in a world where certain people have all the power and are rigging everything in their favor. So the ultimate cost is the social fabric, the economy, everything starts to suffer, and I think we're seeing that today very much. So, you know, whether it's Mr. Cohen, the former personal representative, a lawyer of the President of the United States, you know, before Congress, explaining about how he, threatened people for no good reason for a decade on behalf of of Mr. Trump to, stop them from being honest or candid or releasing true facts about his past, his history, his education, or whether it's, them doing things like that were in breach of campaign finance rules. Everyone in that hearing was focused on the fact that Mr. Cohen is a convicted liar, is going to jail for criminal acts, and his credibility was greatly damaged as a result. No question about that. But at the same time, no one really made the point, I don't think, sufficiently, which was that this person was the, praised and personally retained representative of Mr. Trump for more than a decade. So, the fact that we have a system now that allowed someone like him to become the president of the country in the first place, the fact that you have a government who is divided along party lines and that so many on the right are really trying to defend or, rebuff any criticism of this person who is now their leader, really has, diminished their credibility greatly. The fact that they want to keep him in power at all costs, even though he's not clearly worthy of their respect or support. And I think that the other thing is that you have, whether it's in the Canadian instance with the AG being told by the Trudeau government, a repeated campaign, as she described, of people trying to get her as the head prosecutor in the country who's acting on behalf of the Canadian people in trying to, pursue at a high level the prosecutions against large companies. She made the decision through all the legal principles and her team and all the people that were lawyers working under her that this was not a case that was deserving of a workaround agreement, but that they should actually be criminally prosecuted, which indeed would lead to job losses and probably personal penalties for the acting minds. All that is what we need to have under a rule of law-based system. But you have the interference of the politicians, and she makes the point that they're doing that's bequest of the companies themselves, right? So you see this issue everywhere in the world, and I say it's because we have gone through a period of extensive deregulation since the 1980s, where at every level of the country, we've allowed this commingling of conflicts of interest with, fiduciary roles. So whether you're the leader of a political sector or a political party or a political representative of a certain area, those people hired you, sent you there to be their representative. And, at the same time, we've allowed the revolving door between the government and business, who, you're constantly selling your influence. Well, on your way out of government, you're being hired, and we've seen this from everyone from central banks to, politicians of every kind, in and out of the finance sector, as an example. There needs to be definitely rules that jam the revolving door, because we can't have this. There's an appearance of bias on every level, and what happens is, again, the fabric of the thing completely breaks down. So people no longer have any trust in officials. They have no trust in the government. They have, a very great sense of inequality and unfairness when it comes to the fact that smaller companies and individuals are prosecuted to the full extent of the law for even the slightest misdemeanor in many cases, and yet the most, egregious conduct is not only condoned but rewarded, and with cost of business style fines and no one actually having to be held responsible. So I think all of this has really come to a huge tipping point, where, I think that we're due to have the thing swing back, where people will not tolerate this, where we go back to putting hard lines on the road again, for example, between selling and advising. Between being an elected representative and taking kickbacks from companies or special interest groups. There really has to be very strict enforcement of the ethical duties and requirements, and we can really reboot the system if we do that. But the whole thing of trying to defend the indefensible because they're of your political stripe, it has to stop. Because what ends up happening is the individual loses all credibility themselves in the process. So you have to be brave and ethical enough to say, I may be of this party or that party, but this behavior is completely indefensible and I want nothing to do with it. And I think that when people stand up for principles like that, you have true leadership and indeed a great influence on the larger population. Because right now, things are so corrupt and convoluted that the average person may indeed say on a regular basis, why would I go out of my way to be honest or to report things when all these people are clearly getting away with so much more. And I think that kind of logic has become a major problem in our society.
The Ontario Securities Commission says it just paid 3 whistleblowers $7.5 million Is that the kind of thing we need to see more of, people being rewarded for doing the right thing?
Well, certainly some people, I guess, will not come forward unless they're compensated or enticed by financial rewards. So it's certainly part of it. But I think there's another bunch of people that just will not be bought. And you have to have enormous respect for the fact that there are individuals working in government, in business, private sector, private citizens who just will not be bought. And I think that is, the thing we have to support and laud and appreciate much more. Look at that as the focus and measure of a person's worth more than whether or not they're a billionaire, as an example. When they stand up for the right thing. And I think that, the Attorney General in Canada was actually one of those examples, not coming forward on a whistleblower, but coming forward and saying, actually stepping down from the cabinet because she felt so strongly that her staying on even in a different portfolio was somehow endorsing what was going on in the government. And as I say, this is not a political party thing. This is not, as we've seen in the U.S. when the Democrats were in, we saw lots of this. Now that when the Republicans came in, we've seen lots of this. The same thing with the calls now for the Liberal government to step down and all that. And the investigation should proceed and chips fall where they may. But thinking that you can change the government and you will suddenly get a different outcome, I think is a mistake, because the biases in the system are endemic, as I say. It is not about political category. It's about the way we've structured this thing. We've literally built the foundation of our main institutions, whether they be financial, whether they be government, whether they be big corporations. We've built them on these tenets that everyone can be bought and that, increasing scale and profits is all that ever matters. And of course, that is the very seeds of our own destruction.
We'll have more with Danielle Park when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO on the TSX Venture Exchange. Rainy Mountain Royalty Corp is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Danielle Park. Danielle, how do you think the China-U.S. trade talks will end up?
I think they are going to be extremely difficult to actually resolve. I think there's a lot of grandstanding and political theater that's going on right now. But the reality is that the model that China has used to grow and to evolve its technological expertise is very similar to what other countries have used at other times, certainly what Japan did in the 70s and 80s. The transfer of their patent information and taking protected information off companies who come to do business. These are all sort of basic ways in which developing countries catch up or, get a foothold to start their economies. And that's what happened in China, and that's been their dominant business model. So in the mix, of course, they were the vendor take-back financing. They provided it to the U.S. in their massive consumption phase, which now has the U.S. incredibly in debt and China holding a great deal of that paper. And when you have that kind of a scenario, you both have a lot to lose, right? Because now the person that you loaned all the money to is your greatest risk as the owner of the debt, and that's China's situation. At the same time, they have their population has aged, and they have become enormously indebted themselves with nearly 300% debt to GDP now, before their population has got wealthy. Yes, there's been this rise of a middle class and a certain amount of population which has got wealthier, but they still have masses of the people with very little ability to consume and drive that domestic economy. So both countries have major problems. The debt being sort of the product of the imbalances that have persisted now for the last 30 years, and making a different model is going to be extremely difficult for both of them, especially as we're into the next slowdown phase in the global economy and asset markets are wobbling. You know, the Chinese stock market entered a bear market at the end of 2018. Their housing market is wobbling. They're just as it is in America again, you know, after a very sort of propped up phase where lots of debt reinflated prices, and now you've got things like the U.S. unemployment rate that bottomed at 3.7% in September, ticking back up to 4% in January, Jim. And whenever you see this kind of a move off a cyclical bottom, it typically means it has actually always meant that the U.S. was moving at or in recession. In recession or moving into it, and that then you get this uptick in unemployment. And of course, you know, the only thing that Mr. Trump's government, for example, really had to brag about, or they erroneously bragged about as they came into power, was this idea that the stock market was going up somehow because they were doing such a great job in their management. And indeed, the economic bounce that we saw in 2017 off the tax cuts was always going to be a fleeting sort of a quick burst, and then, you know, no real substantive improvement was going to happen. And indeed, we're seeing that right now with U.S. growth slumping back this week, and, you know, people complaining that their tax returns, their tax refunds are not as high as they were because withholding tax was not sufficient throughout the year. All this kind of a revelation that these promises or these things they were shown as evidence of progress or brilliance and leadership was actually a farce and fake. And so as the unemployment rate ticks back up, as the stock market rolls over, as housing falters, these are the things that really bring anger and intolerance back to the masses. And I think that the pressure is going to really pick up here, both in America and all other countries in the world, frankly, when there's less global growth, when there's less trade happening, when the Baltic Dry Index is falling, when the world's largest transport company, Maersk, reported this week that they are seeing a big drop-off in demand for shipments in 2019 already. They point out that some of that is because of the stockpiling that went on in 2018 on concern about the tariffs and what was going to happen to global trade tariffs increasing as they were supposed to in 2019. So a lot of people pre-ordered shipments and stockpiled goods. Of course, all that really does is accentuate the fall off in demand in 2019, and they're indeed seeing that. So, you know, similar things happen with, like I say, with unemployment. One of the reasons that it starts to rise again late in an economic cycle is, ironically, because of the boom time that preceded it, where stock prices went so high, companies didn't know what to do with it very productively other than buy each other with their overvalued assets. So all of the mergers and acquisitions that typically take place at the peak of a cycle, then as they close a few months later, you get into a period of rationalization where these companies are sort of consolidated and they look to cut costs. And typically, because that happens in a frenzy at the peak of the cycle, you get into the earnings recession right thereafter. And indeed, that's what's happening in 2019. We're seeing a dramatic decline in earnings growth, sales rolling over. So this will drive unemployment higher naturally, on top of the fact that the mergers drove the consolidation forces that typically lead to layoffs. So all these factors really set the economy up for a challenging period. And as I say, coming into it with the most debt ever in human history is going to just accelerate that and make it even more challenging than average period. So the good news is, and I do think there's good news in this, because the add, debt, and stir strategy that has dominated the conflicts of interest, the not having transparency, the rigging of rules and shady deals behind the scenes that have been the dominant sort of operating model over the last couple of decades, I think is really coming into a cleansing period because of these factors. Because when capital flows recede, when job markets weaken, all these things make people really aware that they haven't made much lasting progress, and that they start to get very frustrated and call for change, demand heads, this kind of thing. And I think that will be the cathartic phase of this, and we desperately need it, because when times are good or looking good, when everything below the surface seems to be in order, people become much more complacent and much less careful, both about their own financial decisions and also about what other people are doing, like companies and governments, and that's when a lot of the bad stuff happens. So greater vigilance, greater awareness, more pain really brings people to consciousness, and I think that will be ultimately a good thing.
We'll have more with Danielle Park when This Week in Money returns.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYP.V, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMY.Resources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Danielle Park. Danielle, on your blog, Juggling Dynamite, an article about Spain being the healthiest nation on earth. Why would Spain be so healthy? And one of the reasons we might mention that on a money show is that the healthier you are, the less the government and individuals have to spend on health care.
Oh, absolutely. It's one of the largest economic impacts facing us as taxpayers as we look into the next, 20 and 30 years, even in the next 5, with the aging population, and then the young people in various states of illness already because of the food they're consuming and the lifestyle that is too sedentary. So it's of great interest. I think this is definitely going to be a new theme for growth and productivity focus going forward, is how do we get the population back into a healthy body mass? How do we get people off the drugs and back into organic ways to promote health, so that we're not spending an endlessly escalating amount of revenue every year on sick care costs. It's not really health care costs we've been spending on, it's sick care costs and profits that go to drug companies when, at the expense of everything else. So ultimately, this was the Bloomberg Healthiest Country Index. They take a survey every year, various factors, alcohol use, cigarettes, blood pressure, lifestyle-based disease, body mass, all these things, and mental health, and they grade them as to who has the highest score. And out of 169 countries, which they rank in this way, Spain came out as number 1 this year. They were 6th last year, and it makes perfect sense because, anyone who's ever traveled to Spain, and I did not too long ago, we were really taken back by the obvious normalcy of the body types in that part of the world, of the activity level where people are out walking, where food is so diverse and grown, and they happen to have a very advantaged climate in that part of the world where they can produce food, where they have 300 days of sunshine, where they have very little frost, and they have everything from tropical plants to every kind of nut, olive, the largest olive production part of the world comes from Spain. People don't realize that much of the Spanish olive oil is actually exported to Italy, who relabels it and sends it out in the world as Italian. So a lot of manufacturing too of goods. They still do a lot of clothing and shoes and bags and things are produced actually locally in Spain, as opposed to the ship everything from Asia model, which many countries have gone to over the past couple of decades. And so you have just a more active population. The locally produced food is the healthiest, best, and it is the cheapest. So if you think about in our even in Canada, junk food is typically the cheapest. So this goes back to a fiscal policy, government, corporations, large, big food processed having undue influence on the regulations and the taxation system in the country, whereas we taxpayers are literally, subsidizing through all sorts of different giveaways and low tax rates and loopholes that the big companies are allowed to have, as well as them writing our regulations as to how policy is defined, how the Canada Food Guide is defined. All this stuff really just means that the worst food is fed to the masses, that you have to be wealthy in this country to eat healthy to a large extent, and therefore the masses suffer and the taxpayers have to foot the bill. So this is a model, I think. I mean, obviously we don't have the same climate in, certainly not in Ontario. In BC you have a longer growing season and more potential there. But the fact is that, putting food production back on a local level, not processed, smaller farms, not these big conglomerates that buy up everything. This is really how you get the health of the nation back in support of productivity and evolution and production in the economy overall, and the happiness of the people. So I think it's all really positive, and there's models we can look to, like Spain, for how better to do this. And as I say, it should inform our tax policy, our regulation, and the things that are getting subsidies now really should be up for review, because there's more productive things to do if government wants to support health.
So Danielle, taking a look at that Bloomberg Country Health Index, we have Spain at number 1. Where is Canada and where is the U.S.?
So Canada came in 16th with an overall health score of 90 versus 96.56 for Spain, and the U.S. came in at 78. So we are where they were the 35th overall, the U.S. So Canada is definitely ranked higher than the U.S., but considerably lower than countries like Spain, Italy, Iceland. Even Japan had a score of 95 relative to Canada, as I say, being in a 90.
Even countries that have relatively high smoking rates rated better than Canada.
Yeah, so I think, as I say, that there's a lot of different factors they look at. We'd have to go into the particulars of that, but smoking is certainly something that's still very common in a lot of the world. I would say even more so than here, and certainly in Europe you see a good deal of smoking. So that's definitely one of their negative factors.
Yes, and BC with its low smoking rate, second lowest in North America, second only to Utah. Our life expectancy is tied with Japan, which is the second highest in the world. And again, people say, what does that have to do with money? Well, the healthier you are, the less is spent on health care, on drugs, all those things that suck a lot of money out of your wallet.
Well, that's the thing. It's no longer true that longevity is necessarily a reflection of health, right? Yeah. We can live for many years now with a very low quality of life by consuming a large amounts of pharmaceutical products, and I don't think that's anybody's sort of standard of how they'd like to spend their elder years.
So really, if you want to save yourself some money, get healthier.
Yeah, I always say it's the best investment we can make is investing in our personal discipline around what we feed ourselves, what we feed our families, how much we look after our things like sleep, moderate intake of, poisons like alcohol and that sort of thing. But just managing that is really the best investment we can make. And also, when you look at the financial balance sheets or budgets that people have, a good deal of waste goes around this whole food piece. A lot of people going through for, drive-throughs, whether it's just for grabbing coffees and breakfasts and everything throughout the day, and they wonder, why they don't have more funds left for longer-term investment or things that are larger goals, and a lot of it has to do with the slippage and waste they have around food.
Right. If you have Starbucks once or twice a day as opposed to taking a thermos of coffee to work.
Sure. I mean, obviously everyone has to look at their own budget and figure out where they want to treat themselves. And, I'm not trying to tell anybody where they should treat themselves, but math is math, and there's only so much income coming in, and the amounts that are going out, you want to make sure that they're conscious and allocated to goals that you hope to achieve rather than just like holes in your bucket that are flowing out with you not being aware.
And of course, we have a lot of young people leaving home who don't know how to cook. So they feel forced to order in food.
This is the other huge thing. We need to go back to teaching people how to prepare food. It really is not that difficult. And, we've been brainwashed over the years by a lot of companies who have a vested interest in telling us how complicated it all is and how we don't have the time to worry about cooking. So here, grab this frozen dinner we've given or this, ready-made meal that we've prepared, and we take all the, work and headache and everything out of it. Well, actually, creative time can be expended in cooking. Cooking is actually a very relaxing, talk about something that reduces anxiety. We have a lot of people with anxiety problems in the world today. A lot of that comes from the inability, the lack of sense of how to support and look after yourself. The feeling that you are not self-sufficient generally increases one's level of anxiety. So again, recommitting or reconnecting to things like local food production, knowing how to take raw food and make nourishing meals for yourself and your family, teaching men and women how to do this is all part of, really taking back power for the individuals and the families at the local level. And that is the other side of, like I say, this pendulum that has gone all in favor of big companies extracting profits and individuals and local level economies suffering. This reinvestment back in the community in all these different ways is essential, I think, to the next big increase in prosperity in the world.
Danielle, thank you so much for being on This Week in Money.
Hey, thank you.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. She's the president of Venable Park Investment Council, Incorporated. She was speaking to us from the Toronto area. Coming up, Hilliard MacBeth next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Hilliard MacBeth. He's a portfolio manager in Edmonton and the author of the second edition of When the Bubble Burst, Surviving the Canadian Real Estate Crash. His book's available in bookstores and online. Hilliard, welcome back to This Week in Money.
Nice to be on the show.
Hilliard, how has the reaction and sales of the book been doing?
Well, I think the big new thing about the second edition is the discussion about how we actually got ourselves into this bubble situation. So it turns out that in my research, I found that the economic theory does not deal with housing bubbles or debt or banks or lending or defaults and foreclosures and all that sort of stuff. All of that was eliminated if it was ever in there. And of course, it's one of the biggest factors, especially when you get these asset bubbles, that determines the cycles of the economy. So when we traced all that back, we realized, there's no real way for the government or the regulators to prevent these bubbles from forming, because the economic theory doesn't recognize that they even happen, and also that means they can't predict them, but it also means they have great trouble in fixing them as well. So the end result of that, of course, is some new recommendations about how to survive the crash when the bubble bursts, both for the individual homeowners and for some suggestions for government and other authorities to prevent it happening again. But I'm not that optimistic on the second part. It seems to be built into our psyche that people love the roller coaster ride.
Is there anything governments can do? I mean, in British Columbia, they brought in the foreign buyers tax. They have a speculation tax if you own 2 homes. They're taxing homes over $3 million. What else? I mean, are those measures going to do anything to help?
Well, the problem with the government intervention is it's always too late. So if the goal is to help people, or to help save them from getting hurt too badly, then the proper time to intervene would have been much earlier. So, for instance, having a limit of the lending being 3 times the household income. So, of course, what that would mean would have to be imposed gradually. That would mean it would be very hard for house prices to get much above that, because the bank lending is still very much the main factor in mortgages. Now there are some other lenders out there, and there's mortgage brokers, and there's private loans you can get and all that kind of stuff. But the bulk of the money that's available to buy housing is through the banking system, and putting a limit on that would have stopped the bubble from being formed and getting so out of control in the first place, and that would have been the time to intervene. So now the political pressure got so great, especially in Vancouver, but it's also in Toronto as well, that the government has to be seen to be doing something. But the kind of measures they brought in have certainly put a damper on the bubble. And in fact, looking back on it, I suspect they'll be identified. Those measures will be identified as having started the crash that is underway now. The bursting the bubble and turning into a crash. But I don't know if that's correct. I think possibly the bubble was ready to burst anyway, and the government measures were a coincident indicator, but not a causation by themselves.
But will they make it worse?
They can exacerbate the downturn for sure, but there's really no way out of the kind of bubble that Vancouver had, and Toronto, and even Edmonton and Calgary. Those kind of excesses are so outrageous that there's no way out of it without a crash. And so who knows what the straw that breaks the camel's back is going to be, if something would have come along if it hadn't been for those measures. Now, having said that, some of those measures are actually really good, like the CRA recognition of each sale, and people having to claim the principal residence to get it rather than just it being assumed, is a great idea. And there's a recent one the BC government is doing with pre-sales of condos, which is excellent thing. Any more information that we can have that stops people from avoiding tax is really important. But the people that were avoiding tax or doing the money laundering or any of that kind of stuff, they probably weren't causing the bubble on their own, because the bubble is, it was in Regina, it was in Edmonton, it was everywhere. So most of the money laundering and that sort of thing was more confined to Vancouver and Toronto. So the bubble was happening anyway, but the money laundering and the avoidance of tax, made it worse. So real estate's one of the best methods to launder money or to avoid tax, because first of all, the amounts are very large. People talk about the casino and duffel bags full of cash going to the casino. Well, you got to bring in a lot of duffel bags of cash into the casino to equal even one modest home in Vancouver. And so buying 3 or 4 or $3 million homes, you can launder a lot more money than trying to put all that cash through a casino. So the real estate's perfect for that, and obviously it was used a lot for that in the higher price brackets like West Van and parts of Toronto. So the government measures are a good thing, and but they didn't cause the bubble, and they didn't cause the bursting of the bubble either.
The Financial Post published an article saying the stress test now is harming Canadians more than it's helping. What's your opinion?
Yeah, so that was written that the keywords are special to the Globe and Mail, right? So it was written by an industry person. It turns out a real estate agent, and he was saying that because prices have now normalized, it's time for the government to back off, which is kind of a crazy thing to say because prices are far from normalized. That certainly prices in Toronto have been going down for about 2 years now. The peak was in April of 2017 in the single-family home, but prices are still way too high in condo markets and still way too high in most single-family homes as well. So there's really no part of Canada that I can think of right now where that had a bubble where the prices have normalized. We're just in the start of the process. So, and the second thing the point he's making is that the first-time buyer is being blocked from buying the home. Well, the other way to look at it is the first-time buyer is being saved from not getting way, way deeper into debt than they can really afford to buy real estate that's still very overpriced. So I know that it hurts the industry, and I can understand the point of view that the volumes are way down, like way down. This is unprecedented, the drop in volumes in terms of sales, which has got to be hurting everybody in the real estate industry and in the lending industry, all kinds of people. But the real solution is to get prices down to a level where people don't have to go into levels of debt that are just impossible to pay back in order to get on the housing ladder as the first-time buyer. So if you really care about the first-time buyer, which is what the article was purporting to do, you'd want to make sure that the unwinding process continued for quite a bit further and the prices got down to much, much lower levels than they have so far.
We'll have more with Hilliard MacBeth when This Week in Money returns.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Hilliard MacBeth. Hilliard, the BC budget says the provincial government expects housing starts in BC to drop by a third over the next 2 years. What's that going to do to housing affordability? Well,
there's enough houses for sale in BC now that you probably don't need to build a whole bunch of new houses. There are, I don't know the numbers in Vancouver, but Edmonton and Calgary, there's 5,500 homes that have been built that have not been sold over the last, and it started around 2014 and it's just carried on for 4.5 years. There was 2,000 homes that were not absorbed in the end of 2014. Now there's 5,500. There's 2,500 homes in Edmonton alone that are sitting brand new, waiting for a buyer. And then, of course, on top of that, there's all the existing homes that come up for sale because people want to get out of them, or people, move into a nursing home or whatever. There's a whole wave of sales coming from baby boomers that are reaching 65, 70 years old and need to move out of their single family homes. So, the overinvestment in real estate goes back, all the way back to 2008. And the levels of 6, 7, 8% of GDP that the country as a whole has been putting into new homes and new condos is way above the long-term trend, way above what is needed. Now there might be some pockets, and maybe Vancouver was one of them for a while, that needed more housing, but in general, it's an excess of housing rather than a shortage of housing. And one of the other problems with that too is that because of they love the condo building as a way of getting out of the land that they own, the developers I'm speaking of now. There's been way too many luxury condos built, and that's really not what people. There's a shortage of housing. It's in 2 and 3 and 4 bedroom homes, and generally large families don't usually end up living in high-rise condos with small little boxes to live in the sky. So they built the wrong kind of housing as well. And I personally think that government intervention is required there to force people to build the kind of housing that is actually needed. It doesn't seem like the private market is capable of dealing with that. So if there is a shortage, it's because they've been building the wrong kind of housing, not because they haven't been building a lot of housing. It's just perhaps the wrong kind.
Well, Ross Kay also suggested the wrong kind of housing. He said what they need to do right now is have something for people who are retired to move into. They don't necessarily want to go into a high-rise either, but a smaller, more affordable home for them where everything's on one level so they can get around easily. And he said they haven't been building what he calls exit housing.
Yeah, that's a really interesting point. I haven't written much about that, but I've been thinking about it a lot because in 40 years of doing what I do, I've yet to see anybody. Now, of course, it's a different segment. Our clients tend to be higher income, but they do tend to own single-family homes, and then eventually they don't want to live there anymore. Too big, rambling 2-story house, too much work. There's just 2 people left, and the kids are all gone. And there's nothing for them to move to. It's exactly correct. There's very little available, and most of those people in that situation do not want to live in a high-rise, although a lot of them do move to a high-rise. But an awful lot of them are just staying in the housing that's not really suitable anymore because there is no alternative. And the other thing that comes up is selling and taking out money to help pay for retirement. And we still can count on one hand the number of people who have actually taken money out of that. So they always end up, when they sell, if they do sell, they end up spending as much as or more for the new housing, and it's not the right kind of housing. So it's really there is a real need for it. I don't know what the solution is. There's a lot of infill housing in some cities, and but what they're building, because of the way the rules and regulations works, they're building these tall, skinny houses, and those are totally unsuitable for the exit housing for the older baby boomers. So too many stairs for one thing. So it is a problem, and I think that would be that's going to be the big story over the next 20 years is the number of people hitting 65 and 70 and 75, and the housing needs do change when people reach those age levels.
Are we likely to see real estate goodies in Canada's March 19th federal budget?
I think probably we will see something. I don't think it'll be that impactful. Modifying the B20 guidelines, I don't know if that's going to happen. I doubt that that's a part of it. I think they were pretty clear when they brought them in that was necessary, and they were willing to live with what they called the unintended consequences. But there may be some other, the UK brought in Help to Buy lending scheme, which is just crazy. But anyway, that's where the government lends people money for the down payment so they can get into expensive housing as first-time buyers. Changing the RSP rules, something like that, they'll probably do it. Because the problem with the government is they sort of, sometimes it's just they need to be seen to be doing something. Even if it doesn't have a huge impact, they need to show that they're concerned about it. If a lot of people are concerned, then they need to demonstrate that they care.
Is Canada's housing bubble likely a result of money printing by the Bank of Canada and money laundering?
So it's interesting. The actual money printing that goes on is more in the actual chartered banks. So most people remember that first time they got a mortgage to buy that first property, house or condo, and they signed the documents. And if they were paying attention, they'd notice that all of a sudden their bank account had $300,000, $400,000, $500,000, even $1 million of new money deposited in it. Now, economic theory is so useless at this point. What economic theory says is that money comes from a wealthy, older depositor in the bank who transfers the money to them, and then they use that money to buy a house. That's not true. It's not what happens. Nobody else's account in that bank went down by that $500,000, so your account could go up by $500,000 to get the money for the house purchase. It's brand new money that's created at the stroke of a pen, out of thin air. It's like the bank sprinkles fairy dust and creates it out of nothing. And it's actually done at the banking level. The Bank of Canada is capable of printing money because the Bank of Canada is also a bank. But if they printed money, they would do it in cooperation with the government. So the government would spend money, and then the Bank of Canada would print that money for the government to spend, just the same way that the commercial bank is printing that money for the buyer to buy that house. So yes, there has been money printing, but it's been at the bank level, not at the commercial bank level. And there's been a lot of it. The mortgage, total outstanding mortgages has grown up until recently by more than 6% per year for a couple of decades, and it's been almost exactly the same rate of growth as the house prices in Toronto and Vancouver. So now that has slowed down, that means that people are paying back the mortgages faster than new mortgages are being created. And that's why you will see house prices come down, and also probably see a recession, because that impulse of that extra money that was printed, most of it went in to buy the house, but then a whole bunch of other things are triggered by that. Furniture sales, house prices go up, people feel wealthier, so they buy a new car. That whole thing works in reverse, the reverse wealth effect, when the money printing at the commercial bank level slows down. And then that can cause a recession if somebody else doesn't step in. The other people that can step in would be business investment, or the government could spend more money. But the individuals that are buying houses, if they stop buying houses, or even just slow down the rate at which they buy houses, means that the total amount of money outstanding stops growing, and that creates problems. Money laundering was the second part. Money laundering is a part of the speculation right at the high end. I see in Vancouver and West Van, some house prices have gone down 38% from the peak. The peak was in summer of 2016, July of 2016, and recent sales in a couple of specific instances have been as much as 38% off that peak. So that is, the money launderers have disappeared. They're afraid of government scrutiny, or they moved on to some other city, maybe they moved on to some other country. So that didn't actually cause the housing bubble, but especially in Vancouver, it made it a much bigger bubble than it would have otherwise been.
Are inverting yield curves an indicator a recession may be around the corner?
It certainly has been in the past a good indicator of recession. There's a bit of a debate about it, but really, when yield curves invert, it's not so much the fact that yield curves are inverting, but it's the reason that they invert. So the reason they invert is the Bank of Canada, the Federal Reserve, or the Bank of England raises short-term rates, and then the long-term rates do not go up at the same rate. So you got a 10-year bond yielding 3%, and you've got the Bank of Canada raising rates up to 2.25%, 2.5%. If they keep raising rates, and that 10-year bond stays at 3% or comes down, it's actually in Canada it's down to about 2.2% now. Eventually those two invert, and that's a good sign of recession. I don't think it's 100% foolproof. I've seen a couple of studies that say that occasionally it's not reliable, but it's sort of like 98% reliable. And the reason is, if the economy was really strong, then that 10-year bond rate would go up as fast as the Bank of Canada rate. So when it doesn't, when the bank account rate keeps going up and the 10-year rate doesn't or even goes back down a little bit, that tells you that people are worried that, people that have some knowledge about what's happening, maybe business people or other investment people, are willing to accept a bond rate at less than 3% on the 10-year bond. That tells you that that the recession could very well be coming fairly soon. So there's usually a bit of a lag. It's I think the average lag I saw was like 6 to 9 months. So, and the yield curve some parts of the yield curve have inverted. The one that most people watch is the 2-year versus the 10-year. And in Canada, it's almost inverted. In the U.S., it's 20 basis points off, which is very tiny. So it hasn't actually quite inverted yet. So if it's a good indicator, it may be that you'd have to wait a little bit longer for it to be a certainty, but it's certainly worth watching very closely.
Are housing sales and auto sales indicators of the strength of the economy? Absolutely.
I think it starts with how people feel about their jobs. So if people feel that they've got a job, if they feel like they're heading for a salary or a wage increase or a bonus, and they feel they're not likely to lose their job, then they're going to go out and sign that mortgage paper, and that new money goes into the economy. And the same with car sales. So they got almost all car sales now involve a loan. Now they're up to as much as 96 months, 8-year loans, which is crazy, but that's where the industry is now. And so people have to have some confidence that their job is secure. And so it's a sign that people feel good about the economy. If they stop doing that, if they stop signing those papers and stop going to the car dealer, then that indicates either they may have lost their job, or they're not getting the overtime that they used to get, or somebody in the household has been laid off, and then so it's a good indicator. I don't know that's a leading indicator. Probably not a leading indicator, but it's a good indicator of how things are going. And of course, housing sales have plummeted, so that is an indicator that things are slowing, and of course in automobile sales are slowing as well. So, and it's been a long time since we had the last recession, which was in 2009. So soon it'll be 10 years, which is much longer than the average time between recessions. So all three of those things are telling you that we're closer to the next recession than we are to the last recession.
Hilliard, a lot of people I've talked to say the next car they want to buy will be an electric car. But right now, the cars that are for sale are very expensive, and they're waiting for, much lower prices for electric cars. But who's going to stock electric cars if sales are slow right now? I mean, it's a catch-22.
It'll be interesting to see. I think there's going to be a problem that the average length of time that people own cars is a big factor when it comes to predicting the car sales, and it's starting to get stretched out. And one theory that some people have, and I think it might be correct, is that people are waiting to see what's happening. There's so many new models being announced, but most of them are not available yet, or if they are available, they're not affordable. So the people want to get electric. I've talked to many, many people. As you know, I have an electric car myself, and now my wife has one too. When you get in these conversations, they always say something like, well, I'm thinking about maybe getting an electric car, my next car. So what that means is not that they're going to buy tomorrow, but it does mean that there's not going to be a car sale in that household for a while. And if there's a recession as well on top of that, then car sales could really get hammered. And there's an awful lot of debt outstanding with auto. There's way more debt going into this recession in related to automobiles than there was in the last recession. So that means that the lenders, who are a key factor in this whole auto purchase thing, might get hit. And if they get hit, then they won't be able to provide the financing. So what they do with car loans, of course, as everybody knows, is the car dealer initiates them, but then they immediately get bundled up and sold off as sort of similar to what they were doing with mortgages back in the U.S. back before the financial crisis. You get these bundles of loans that are sold to investors. So if the defaults pick up, the investors are going to get cold feet. They're going to back away, and then that's going to make car sales very difficult. So two factors. People are wondering whether they should wait and get an electric car once it becomes affordable, and secondly, the financing might dry up.
We'll have more with Hilliard MacBeth when This Week in Money returns.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Hilliard MacBeth. Hilliard, in an election year, Canadian mainstream media is getting a taxpayer-funded payment of $595 million from Prime Minister Justin Trudeau. Is the mainstream media likely to tell us that Canada is in a recession prior to the October election, considering they got a handful of cash maybe to change their message?
You know what? I don't remember. And as I mentioned before, I've been doing this a long time. I don't remember the mainstream media ever telling us that we were in a recession. So the normal time it takes for an official recession call is about 6 to 9 months after the recession starts. So it would be very unlikely that the mainstream media would ever tell us that we were in a recession, partly because they depend on advertisers, and some of their biggest advertisers are the real estate industry and the car industry, and they don't want to hurt sales for their primary customers. So the newspapers are in the business of putting eyeballs in front of advertisers, and the last thing they want to do is tell everybody, oh, there's a recession, so don't bother buying this product that we're advertising on page 9 of the front section. So I don't know about the taxpayer-funded handout being connected to the mainstream media not talking about a recession. They just generally won't talk about it. And that's part of our problem with the media advertised model. If you want to get information about things like housing bubbles and crashes and recessions before they happen, you have to go outside of the mainstream media. And the wonderful thing about the internet and the books as well is that you can get that kind of information. But if you're waiting for it to be on the front page of the newspaper, you'll be waiting forever. I guarantee it.
Well, my insiders tell me people like newspaper reporters are told not to report auto dealers convicted of rolling back odometers because auto dealers are, as you said, one of their biggest revenue sources.
Yeah, I mean, you look at I watch on TV. I don't watch too much TV anymore. Most of the younger people I know don't even have a TV anymore. But I do watch the hockey and a few other things like golf and that. And like 90% of the ads are car ads, right? And so, like, this is a huge source of revenue. People don't realize that those channels are dependent on this. So they're not going to. First of all, they're not going to probably want to promote electric cars because their advertisers are not selling electric cars yet. And secondly, they don't want to, have anybody start questioning the car sales model. But one of the other things besides electric that Tesla has done is they've pioneered this buy your car over the internet model rather than going to a car dealer, and that's hugely disruptive. And there's so many car dealers. If you drive around any major city in North America, the amount of land that the car dealer has, the models they have to have on hand, and the space they take up for their showrooms and also their maintenance bays, the electric car is going to change all of that because there isn't the maintenance, and also people are just buying them off the internet. They just select the color and there just aren't that many options. They select the what they want, and 3 or 4 weeks later, hopefully the thing shows up in their driveway. Magic. So that hurts the dealer, and of course those dealers are, along with the manufacturers, are big advertisers for everybody. So there's an awful lot of disruption coming in the near future. And one of the things that's most at risk, I think, is the mainstream media financed by advertised-backed dollars.
Another thing I thought about with cars is, what about 3D printing, where you just go to the dealership and you can pick a personal design yourself? All they have there is the motor and the chassis and transmission. And if it's electric, the motors are built into the axles of the car. So really, you could have a pretty wildly designed top of the vehicle with some pretty nifty features that you designed yourself and printed.
Yeah, no, absolutely. And one of the things I think people have missed so far, and I haven't seen much written on this, is that the manufacturing of an electric car is much, much simpler than the internal combustion engine car. The big challenge in car manufacturing is the engine and the transmission and the drivetrain. That's the finicky part. And in the electric car, there's no transmission, and the electric motors are really standard, and they sit right, as you say, they sit right on the axle, so there's a differential, that's all. So it's much easier to make them. I mean, I'm sure you'd be able to buy a kit and make your own electric car. Now, whether it would be legal for the street or not, I don't know. You could 3D print the body and buy the axles and electric motors, and I guess the one tricky thing in the electric car is the battery. So that you'd have to, the batteries are going to be the challenge for the big manufacturers like Tesla. There's several big Chinese manufacturers now too, and there's a Chinese company. I won't try and remember the name because it's a long name and I don't remember it exactly. Making batteries, and then there's Panasonic in Japan who's working with Tesla, and then there's a Korean company called LG which makes batteries, but that'll be the big challenge, will be making the new technology and new strides in the weight of the battery and the amount of power it puts out. And then once that's improved, there's going to be there'll be nothing holding them back. And you will be able to probably make your own car in your backyard and start selling it to your friends.
What can we expect to see ahead in Vancouver's housing crash?
I think the 38% drop in West Van that I just saw reported on Twitter yesterday, and there's been several like that from the peak. So prices now this was a $4 million home that sold for $2.8 million. The numbers are roughly in that range. So the 2015 price was actually a little bit higher than so it went from 2.9 to 4 point something, and then back down to 2.8 now. I think I might have it sort of roughly the idea. 38% drop from the peak and lower than 2015 prices. This is turning into more than just a correction, and it's, you have to start using the crash word in that sense. And there's still many, many, many homes left that are for sale in that category. So the high-end category has been weak now for 3 years almost. 2016, as I mentioned, was the peak. So, but what did keep going was the condo market. The condo market kept going up for the first, for 2017, most of 2018. So now the condo market is starting correcting, because the condo market will correct once the single-family homes expensive prices start coming down. And now that they have come down by that much, you'll start seeing it putting a lid on or even pushing down on the condo prices, because who wants a 1,200 square foot condo for $1.5 million when you can buy a full home with a lot and a garden and all that for not a whole lot more? So that's the squeeze that's on. So we're going to see a lot more impact on the mid price range in Vancouver as the high end prices come down.
Where can people get a copy of the second edition of your book, When the Bubble Burst: Surviving the Canadian Real Estate Crash?
Well, you can go to your friendly bookseller. There's still a few bookstores around, or you can go online with any of the Amazon or Chapters or Indigo You can also get the Kindle version as well. So all of those methods are available, and I think if people want to do that, I'm sure they'll enjoy it.
Hilliard, thank you so much for being on This Week in Money.
Thanks a lot.
My guest has been Hilliard MacBeth, his website, macbethgroup.com. And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Danielle Park, and Hilliard MacBeth. Plus, we'll have a company showcase update right after the show from American Manganese CEO Larry Reaugh and Cypress Development CEO Bill Willoughby. I'm Jim Goddard. If you have any questions for the show, you can email us at info@howstreet.com. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, Jim, it's been a busy day so far.
It sounds like you're spending a lot of time at your pilot plant.
Well, that's where I'm at right now, and I'm really happy with the progress that's being made. And, moving on, it's just in a quick recap, there's been lots of news on EV cars and battery recycling. And as you know, somebody came out with a report that it'll be a $92 billion business in EV cars in 2025. And the number is moving up rapidly, I think $27 billion on recycling. And that's where we are, in the recycling area. We've got a total circular economy solution in recycling. We get 100% of the cathode materials back. And we haven't worked out the number on the anode, which is the graphene or graphite, but that'll be coming pretty soon. And but I'm sitting here with Norm Chow. We just had a meeting with some potential investors, showing them the process and everything. So maybe Norm could update us on, without going into any disclosure, that on the pilot plant.
Larry, who's Norm Chow with?
Norm Chow is the president and CEO of Kemetco Corporation. This is his project, and they're the guys that have worked all the miracles for us.
Hi, Jim. Norm here.
Hi, Norm. Good to hear you.
Nice to speak to you, Jim.
What are your impressions of this pilot plant so far?
Well, basically, the pilot plant is to kind of prove what we've already discovered on the laboratory scale, but we're treating real materials on a larger continuous process. And there's 5 phases to the pilot plant. We are working on phase 1 and 2. What we're actually treating right now is basically cathode scraps that we sourced from a supplier in the United States. And part of the technology in phase 1 is to separate the active material from the aluminum foil, which is part of the collection. It's treating the real material. And also taking the active material and then doing the leach to do the extractions. And so far the pilot plant, basically I would say the pilot plant has proved the technology on the separation. We are going to consider filing for patents on the technology. And we've produced the pregnant leach solutions as well. So phase 1 and 2, I'd say the processes are running smoothly and the concepts have been proven. We still have more material to process. But yeah, so the pilot plant is running well.
What Norm is saying is that the stage 1 and stage 2 have been successful. We'll be moving on to the stage 3, and that is the next big step for the pilot plant. So, I'm hoping that, by the way, that we meet our timeline, which is that we'll have the pilot plant up and running and completed sometime in May. How do you agree with that number, Norm?
Yeah, we're on track. Basically, phase 1 and 2 are the most was theoretically the most difficult parts because we were dealing with the real material, and that has been running fine. The remaining parts is basically treating the pregnant leach solutions, basically dissolving all the cathode materials, just the treatment of the pregnant leach solutions to precipitate out the base metal, hydroxides, and the lithium carbonate. Those phases are, I consider, significantly easier than what we had in the beginning when we were actually kind of pre-treating real material to do the separations. So the pilot plant basically has confirmed new intellectual property that we're going to be filing for, and the remaining parts, which is the treatment of the pregnant leach solutions to produce the base metals and the lithium, that I consider a much simpler process. So we've gone through the hardest part and successfully.
One thing that I'd like to add is that when this pilot plant is finished, we expect to have a very high purity. I don't know, 99.7, 99.9.
It'll be in that range of the materials because the feed material is already clean going in.
And the recoveries, where you want to maintain those at 100%. So what we have to remember is that this is a process. It's a cradle-to-grave environmental solution for the disposal of electric vehicle or any lithium-ion batteries because of our MOU with the Dutch group. That MOU will allow us to start treating smaller devices, smaller device batteries like cell phones, laptops, those types. And, the company is really sitting on a total solution. And when the pilot plant's done, we can say that this is what we get. And then we can move on to commercializing the effort.
Larry, can you give us a bit of background for new listeners?
Okay, maybe I'll get Norm, because I've done this a dozen times. It started with the manganese project.
Yeah, so basically what we have developed is a technology to use our know-how in the mining industry, hydrometallurgical treatment, to use those know-how and technology to develop a method to basically recycle the expensive parts of a lithium-ion battery, which is the cathode, just using the hydromet process. So we have a high-value feed stream, and we're doing the process to recover the materials that will go back into remanufacturing lithium-ion batteries. So you're going from waste material to a high-value material in a closed-loop fashion.
So basically, it started with our manganese project. Anybody can find out everything that's happened on our website, AmericanManganeseInc.com. They can email me at lreaugh, R-E-A-U-G-H, at AMYMN.com. They can phone us at 778-574-4444. And we are traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM.
Larry and Norm, thank you so much for the update.
You're welcome.
Thank you, Jim.
My guests have been Larry Reaugh from American Manganese and Norm Chow from Kemetco. I'm Jim Goddard. Our conversation took place on March 1st.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Bill Willoughby. He's the CEO of Cypress Development Corporation. Welcome back to the show, Bill.
Yes, thank you, Jim. It's a pleasure to be here with you.
Bill, new development for your company. Can you tell us about it?
Yeah, well, this morning we put out a press release confirming that we have positive metallurgical results from our first phase of testing for our pre-feasibility study, PFS work, and that's on our Clayton Valley Lithium project in Nevada. Our testing was successful in confirming a range of parameters from our 2018 preliminary economic assessment, our PEA, and these results demonstrate that we can get lithium extractions in the range of 75 to 83% and sulfuric acid consumptions in the range of 85 to 132 kilograms per ton.
Bill, for people who are new to your company, what are you all about?
Well, we have one project, and that's our focus. We also have a zinc project up by Eureka, Nevada, but that's a secondary emphasis for us right now. Our main flagship project is Clayton Valley Lithium, which is joining Albemarle's Silver Peak lithium brine facility in Clayton Valley. It's just in Esmeralda County, more or less halfway between Las Vegas, Nevada, and Reno, Nevada. We've taken our project from virtually exploration stage 2 years ago through drilling onto a preliminary economic assessment, which was completed in October last year, and now we're working towards a pre-feasibility study. Our main objective with the program is to advance it as quickly as possible, get into the feasibility stage, and then as part of that now we're looking towards doing a pilot plant.
Where would this pilot plant be built?
Well, we've got a couple of sites that we are under consideration on. One in particular that has a number of features that check off a lot of the boxes we'd like. That is in the vicinity of the project down there. So we've been looking at that for several months now and getting closer to a deal.
Bill, where are you traded and under what symbols?
Well, we're on the Ventures Exchange, tsx.v, and our symbol is CYP. We're also on the OTCV in the U.S. under CYP.V.
And if people wanted to get more information about Cypress, where would they go?
Well, our website is the most convenient, which is Cypress Development Corp, all one word, .com. That's the easiest place.
Bill, thanks a lot for the update.
Okay, thank you, Jim. Pleasure speaking with you.
I've been speaking with Bill Willoughby, CEO of Cypress Development Corp. I'm Jim Goddard. Our conversation took place on February 26th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.